Welcome to the channel. Here, we provide clear, actionable insights into the complex world of tax and accounting to help your business thrive.
Welcome to The Explainer. Today we're going to talk about a financial tool that could totally change the game for your retirement, your healthcare, and your long-term security. A lot of people sleep on this one, but honestly, it might be the single best tax-advantaged account you can get your hands on.
Okay, let's just think for a second. If you had like a financial genie, what would your 3 wishes be for the future? What are the big goals that keep you up at night? For most people, it really comes down to the same 3 things.
Right? You want to pay less in taxes now. You want to know that if a big medical bill hits, you're covered. And you definitely want to be ready for long-term care down the road without, wiping out everything you've saved. But what if I told you there's an account that can knock out all 3 of those wishes at once?
All right, so how does one single account tackle these huge future problems? Let's zoom in on a big one, a real anxiety for a lot of people, the insane cost of long-term care. Now, a lot of folks think, oh, Medicaid will be there for me. But there's a huge catch, and it's one people don't talk about nearly enough.
Yeah, so here's the deal with Medicaid. The source material points this out really clearly. After they've paid for your care, the government can actually come back and take that money out of your estate. It's called estate recovery. And what that means is, the money you wanted to leave for your kids, a big chunk of it could just disappear. So understandably, people are looking for a better way.
So what is this better way? Well, it's not just about what you buy. It's about how you buy it. We are about to pull back the curtain on a hidden investment secret that really uses the tax code to your advantage. Okay, here it is. It's called a health savings account, or HSA. Now, on the surface, it sounds pretty straightforward, right? An account for medical bills. But don't let the name fool you. It's real power as a supercharged investment vehicle. I mean, it leaves a lot of traditional retirement accounts in the dust.
The source has a great way of putting it. Using an HSA is like catching 3 rabbits with 1 stone. It's this one single strategy that takes care of your tax problem, your medical bill problem, and your long-term care problem, all at the same time.
So to really get why the HSA is such a big deal, we got to put it side by side with the accounts you're probably already familiar with, like your IRA. Because when you see the comparison, it becomes super clear why the HSA is in a league of its own.
Look, traditional and Roth IRAs are great, don't get me wrong, but they both have a trade-off, right? With a traditional IRA, you get a tax break on the front end, but you pay taxes when you take the money out. With a Roth, it's the opposite. You pay taxes now so you can take it out tax-free later. You get a tax break going in or coming out, but never both.
So this leads to the million-dollar question for anyone who's serious about their money. Is there a way to have your cake and eat it too? Is there an account out there that gives you a tax break when you put money in, lets it grow completely tax-free, and lets you take it out tax-free?
And here's the answer. The HSA has what's called a triple tax advantage, and nothing else comes close. Let's break it down. 1, the money you put in is tax-deductible. Bam, lowers your taxes today. 2, that money can be invested and it grows 100% tax-free. And 3, when you pull it out for qualified medical expenses, it's also 100% tax-free. It's the whole shebang, a total clean sweep.
Oh, and it gets even better. As you get older, the perks just keep coming. The source points out that once you hit age 55, you get to throw in an extra $1,000 a year. It's a catch-up contribution that lets you supercharge your savings right when you need it most. Okay, so we've established why the HSA is a tax powerhouse. Now let's connect the dots and look at the master plan. How do we use this thing to solve that huge long-term care problem we talked about at the beginning?
All right, so qualified medical expenses, that term covers a ton of stuff. Doctor visits, prescriptions, dental, you name it. But here's the absolute key, the one thing that unlocks this whole strategy. That list also includes the premiums you pay for long-term care insurance. That's the linchpin. And the strategy itself is so simple, it's brilliant. Here's how it works. Step 1, you get on a qualifying health plan so you can open an HSA. Step 2, you fund it and get that sweet immediate tax deduction. Step 3, you invest the money inside the HSA so it grows tax-free. And then, the final step, you use that tax-free money to pay for your long-term care insurance. See? It's this perfect financial loop. You're basically turning dollars that would have been taxed into a tax-free safety net.
I know what you're probably thinking. This sounds almost too good to be true, right? So, you've probably got some questions. Let's tackle a couple of the most common ones just to make sure we're all on the same page.
Okay, a big question people have is about that health plan requirement. What happens when I retire? I go on Medicare, I don't have that high deductible plan anymore. Is my money stuck in there forever?
And the answer is a big, fat no. You only need that specific type of health plan, the HDHP, for the years you're actually contributing money. Once the money's in the account, it's yours. You can use it for qualified expenses for the rest of your life, no matter what kind of insurance you have later on.
Okay, next question. What if I don't use all the money? I've built up this nice nest egg in my HSA. What happens to it when I pass away? The rules for inheritance are actually pretty simple. If you name your spouse as the beneficiary, the HSA just rolls over to them. It becomes their HSA, totally tax-free, super easy. Now, if you name someone else, say one of your kids, the account gets paid out to them. They'll have to pay income tax on that money, but there are no extra penalties or anything like that. So when you step back and look at the whole picture, adding an HSA to your financial plan isn't just a small tweak, it's a massive upgrade. It takes your preparedness to a whole new level. We're talking tax efficiency, medical security, and your long-term care plan, all getting a huge boost.
And that really just leaves one final question for you. You're putting in the work, you're building a plan for your future, but is it missing its secret weapon? Maybe it's time to think about adding the most powerful tool in the shed to your financial strategy.